Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Clp Holdings Limited annual report. Clp Holdings Limited offers a diverse range of businesses and services across various regions. The company's primary focus is on the generation, transmission, and distribution of electricity in 6 countries: Hong Kong, mainland China, India, Thailand, Taiwan, and Australia. The company generates electricity through multiple sources, including coal, gas, nuclear, wind, hydro, and solar power. This indicates its commitment to providing a mix of traditional and renewable energy solutions. In addition to electricity generation, Clp Holdings is also involved in the provision of pumped storage services, which suggests its expertise in managing and optimizing energy supply. Furthermore, the company offers energy and infrastructure solutions, catering to the needs of various industries and customers. This includes retailing of electricity and gas, making it a one-stop shop for energy requirements. The company's property investment activities further diversify its portfolio, indicating its ability to adapt to changing market conditions. Overall, Clp Holdings Limited provides a comprehensive range of businesses and services that cater to the growing demand for energy across different regions. Its diversified offerings position it as a leading player in the industry, with a strong presence in multiple countries. Clp Holdings' stock price has seen a significant increase of over 17% in the past year, with a total shareholder return of 20.75%. This notable rise can be attributed to several key factors and news events that have contributed to the company's commitment to shareholder returns. One major factor driving the stock price increase is Clp Holdings' decision to raise its dividend payout despite a mixed financial performance. The announcement of a $3.20 per share total annual dividend for 2025, a 1.6% increase from the previous year, signaled management's confidence in delivering value to shareholders. The company's core market in Hong Kong has also demonstrated resilient performance, with operating earnings increasing by 7.3%. This growth was driven by a rise in electricity sales to data centers and electric transport, contributing to the group's financial strength. Furthermore, Clp Holdings' focus on sustainable growth and decarbonization through investments in renewable energy has been a significant contributor to its stock price increase. The company commissioned new solar and wind assets and secured attractive rates for new projects in mainland China following government policy reforms. Additionally, the anticipated decline in fuel costs is expected to ease expenses for customers and support business and dividend growth, further contributing to the appreciation of Clp Holdings' stock price over the past year. Clp Holdings Limited maintains a market capitalization of $185 billion, broadly in line with the industry peer group. Clp Holdings Limited trades at a higher price-to-earnings ratio of 16 times and a higher price-to-book ratio of 1.72 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 7.14%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be attributed to various factors. On the growth side, demand from data centers and electric transport sectors has been a significant contributor, with electricity sales for data centers growing by 7.5% and consumption related to transport electrification increasing by 32.4%. The sale of renewable energy certificates, RECs, also saw an increase of 6.8%, while the user base for Smart Energy Online, SEO, grew by 12%. In addition, new wind and solar projects have contributed to revenue growth, with moderately higher hydro generation and contributions from new renewable energy projects. CLP China's renewable energy projects commissioned after June 2025 have also secured more offtake contracts and increased direct sales to corporate users. On the decline side, slightly lower overall electricity sales and fluctuations in power market conditions in the Chinese mainland have contributed to revenue decline. Historically low wind resources in northeast China and increased grid curtailment have reduced wind and solar energy generation, while decreased financial contributions from CLP's nuclear energy investments in Guangdong province have also impacted revenue. Furthermore, sales of electricity outside Hong Kong declined by 8%, with a decrease in revenue by $2,946. The decline in other revenue in Hong Kong was also significant, decreasing by $335, 39.1% from the previous year. The financial performance of a company can be a crucial indicator of its overall health. In this case, the company's operating cash flow has been a point of concern. The data shows that the company generated negative operating cash flow for the year 2025, with an amount of $1,176 million. This is in contrast to the previous year, 2024, where the company reported a positive operating cash flow of $306 million. The significant decline in operating cash flow from 2024 to 2025 suggests that the company may be facing some financial difficulties. Negative operating cash flow can indicate that a company's expenses are exceeding its revenues, leading to a decrease in liquidity and potentially impacting its ability to invest in growth opportunities or pay off debts. As such, it is clear that the company is not generating positive operating cash flow, which raises concerns about its long-term sustainability. The company's debt level has undergone significant changes over time. Initially, non-current liabilities increased by 5%, page 26. However, a closer look at the data reveals a substantial rise in total debt from $65,154 to $123,595, page 30, indicating a notable increase of approximately 89%. This surge can be attributed to new debt issuances, page 38. Regarding interest expenses, there is an initial decrease of $1,860 reported on page 29. Nevertheless, the overall trend suggests that interest expenses have increased significantly due to the rise in total liabilities, page 30. Furthermore, a more detailed analysis reveals that net finance costs decreased by 17.5%, and interest expenses were reduced through refinancing and new debt issuances, page 38. In summary, while there is an initial decrease in interest expenses reported on page 29, the overall trend indicates a significant increase in interest expenses due to the substantial rise in total liabilities. Management is outlining a comprehensive strategy for the company's future outlook. The overall goal is to focus on low-carbon energy growth opportunities, particularly in Asia-Pacific, while expanding existing projects and exploring new ones in targeted regions. This includes pursuing growth outside core markets through partnerships across Australia, India, Taiwan region, and Southeast Asia. In terms of renewable energy, management aims to grow the portfolio through a disciplined investment approach, develop new non-carbon energy projects, and explore advanced energy management technologies. The company is also committed to decarbonization, meeting more stringent emission requirements, and continuing decarbonization projects such as battery energy storage systems, BESS, and hydrogen blending. Digital transformation is another key area of focus, with the rollout of a 2025-2028 digital strategy to drive sustainable growth. This includes investing in digital initiatives like smart meters and modernized management and control systems for power distribution networks. Additionally, management is investing in people through talent development programs and low-carbon and digital initiatives. Overall, the company's strategy emphasizes sustainability, growth, and innovation, with a focus on meeting government policy priorities and supporting regional development. The company has a history of paying dividends to its shareholders. As stated on page 2, the answer is affirmative regarding dividend payments. Furthermore, on page 8, it is mentioned that the total dividends for 2025 increased to HK$3.20 per share. This increase in dividend payout indicates a commitment to rewarding shareholders through cash distributions. Additionally, on page 33, it is reported that the company paid out a significant amount of $1,085 million in dividends during 2025. These facts collectively demonstrate the company's practice of paying dividends to its investors. There are valid concerns regarding inventory buildup and supply chain disruption. A significant indicator of this is the Yallourn closure cost provision of $493 million mentioned on page 31. This provision suggests that there may be disruptions to the supply chain in the future, which could have a ripple effect throughout the entire system. That concludes the financial summary for Clp Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.